Capital A CEO Tan Sri Tony Fernandes has clarified that the group decided not to proceed with a club facility of up to 500 million ringgit under the Danajamin Prihatin Guarantee Scheme as it deemed some of the conditions imposed to be unreasonable. In a statement, he said that the required approvals from Bursa Malaysia were not within its control, and while it did seek for the time extension to provide a regularization plan, ultimately its application was denied. Capital A fell into Practice Note 17 status on January 13th after its application to secure an extension for an 18-month period beyond January 7th was rejected by the bourse. It now has up to 12 months to submit a regularization plan to the regulator, failing which trading in its securities will be suspended and delisting will follow. On Thursday, The Edge reported that Capital A was unable to obtain the 500 million facility as it was not agreeable to the condition that its co-founders, namely Fernandes and Datuk Kamarudin Maranon, be guarantors for the loan. Both Fernandes and Kamarudin hold a combined 24.6% stake in Capital A through Tune Air and Tune Live. In the latest statement, Fernandes also gave assurance that both he and Kamarudin were sticking with the group long term. He says they remain committed to Capital A's recovery, having been actively involved in steering the group through this crisis day in, day out over the past 2 years. Fernandes points out that they have personally injected 257.3 million to support the turnaround plan. However, Fernandes explains that while they are willing to provide the personal guarantees requested on top of the previous cash support, the request to guarantee everyone's exposure is unseemly for a public listed company, considering they are just two among many Capital A shareholders, which also includes institutional investors. He reiterates that Capital A will continue to explore other financing alternatives more suited to its operations and requirements, while noting that the group's fundraising strategy remains firmly on track to sustain operations through 2022 and support the airline's recovery. Fernandes says that as international borders continue to reopen in all of its key markets, they look forward to returning to pre-pandemic capacity by the end of the year, in turn returning to profitability and delivering value to its shareholders once again in the near future. The 500 million Danajamin guaranteed loan was part of a 2.5 billion fundraising exercise for recapitalization after the airline was hit hard by the COVID-19 pandemic. As the Malaysian government expects fuel subsidies to top 28 billion in 2022 due to the rising price of crude oil, OCBC bank economist Welian Wiranto thinks that Putrajaya may end up leaning on national oil firm Petronas for special dividends to help plug the subsidy bill. According to a report by Bernama, Wiranto says the move would also help keep the broader fiscal deficit at around the targeted 6% of GDP as first budgeted in Budget 2022. On March 10th, Finance Minister Tengku Datuk Sri Zafrul Abdul Aziz told Parliament that if the world's crude oil price remains above $100 per barrel, total subsidies for the whole of 2022 are expected to reach 28 billion ringgit compared with 11 billion ringgit for 2021. Zafrul also said that the government will review the fuel and cooking oil subsidy mechanism so that it will be more targeted towards aiding and subsidizing the more vulnerable groups. In a note, Welian said that having access to the Petronas pot would be especially important given that it remains unclear how the targeted subsidy scheme would work in practice. However, he notes that given the large gap between real and subsidized prices, potential leakages from some creative transactions cannot be dismissed. On the surge in crude oil prices, Welian says although it benefits the trade balance and fiscal revenues from Malaysia, the net oil and gas producer will have to choose between a rise in fiscal expenditure if it keeps the fuel subsidy and an inflationary wave if it does not. The government is committed to ensuring that permanent employees of government-linked companies and government-linked investment companies are paid at least 1,500 ringgit a month. Prime Minister Datuk Sri Ismail Sabri Yaakob said out of concern for the people in tiding over the cost of living challenges, the government had ensured that all civil servants receive a total salary and allowance of at least 1,500 ringgit a month. Speaking at the launch of the GLC Open Day 2022, the PM says this minimum income level should be practiced by the private sector to help workers address the cost of living challenges, Bernama reports. Meanwhile, in line with the international best practices, Ismail Sabri called on every listed GLC to achieve a level of female participation of at least 30% board members by the annual general meeting in 2023. In Budget 2022, the government had announced that all listed companies are required to appoint at least one female director before June 1st, 2023. He also called on all GLCs and GLICs to have medium-term targets and net zero carbon targets by 2050. Bursa Malaysia Ace market-bound pawnshop operator PAPPAJACK is scheduled to be listed on April 1st under an initial public offering of 167 million new shares at 30 cents a share. The company is aiming to raise 50.1 million from the exercise, which it says will partly finance the expansion of its pawnshops across the country. According to PAPPAJACK's boss filings and prospectus, it will have a market capitalization of 200.4 million upon listing, based on an enlarged number of issued shares of 668 million. The group's principal activities of all its subsidiaries are licensed pawn shops with its market presence in Malaysia, while its customers are the general public aged 18 years and above seeking micro loans. Their target customers are populations who may be financially unserved or underserved by conventional financial institutions. PAPPAJACK says the customers who purchase unredeemed or bid pledges comprise mainly scrap collectors. According to the prospectus, Kenanga Investment Bank is the principal advisor and sponsor, besides being the sole underwriter and placement agent for the IPO. Private equity firm CREADOR says it has acquired a significant minority stake in local food industry supplier Custom Food Ingredients for an undisclosed sum as part of its ingredients category platform play. This marks CREADOR's second food investment in the Southeast Asia region in the past 5 months, with the first being Orion Food Industries, a Malaysia-based seasonings, coatings and marinade specialist. In a recent statement, CREADOR said both companies are part of its new Salvarez Group platform, which acquires Southeast Asia ingredients players and enhances their positioning as end-to-end suppliers for global clients. The PE firm said CFI is Malaysia's oldest high-fat powder manufacturer and lipid-based ingredient supplier for more than 200 clients in 30 countries. CREADOR adds that the acquisition also comes with a strong focus on sustainability and corporate citizenship, as CFI's operations are primarily powered by natural gas systems, while the company also has its own water treatment plant, opting for more energy-efficient equipment and engaging only suppliers with similar green policies. CREADOR founder and CEO Bramal Vasudevan says its investment allows the PE fund to support CFI's next stage of growth, including investing in manufacturing, R&D, marketing, as well as building a bench strength of food tech professionals. On its plans for CFI, CREADOR said it is expecting its investee to expand into new segments, including ingredients for special medical purposes.